All right, welcome everyone this morning. Not fun. The last 5 days has been very rocky as we've been trying to look for a bear market rally, but it keeps slipping away. So really, I'm going to start with let's just look at cues to kind of explain what's been happening here the last week or so. So you can see we started getting a bear market rally here a day after the CPI numbers were released. So I was positioned for that. And then it started faltering after Walmart and Target earnings came out. And then you had Cisco, all, bad news. So that bear market. Then on Friday, there was hope because of this price action right here at the end of the day, which broke a trend of, especially in the SPY. SPY actually closed green. Broke a trend of like 7 straight Fridays where we were down and where the following Monday was like a new low. That didn't happen this past Friday and Monday. So it looked like technical buyers were coming in. And if you look at the weekly chart, you'll see the RSI really low, close enough to the 200-week moving average to say, hey, maybe this is a bottom, because you can see the other two times didn't exactly touch the 200-week. So for all of those reasons, it looked like technical buyers were saying, you know what, the heck with bad numbers from Target and Walmart and Cisco. We really don't care about that. This market's oversold. Let's rally this thing. That's what it looked like, what was trying to happen. And then in after hours yesterday, we initially had some good news from Zoom, which was a beat and raise. And by the way, I did play this one. I bought this before earnings because of the valuation, about a 20 PE, and because of my prediction that their earnings would be good. This is a recession-resistant stock. It's a productivity stock like Microsoft. I don't believe people are going to be canceling this, even if attendees use it less. The money comes from the hosts, the companies, the entrepreneurs, the organizations that have accounts. They're not going to suddenly cut it off. It's too convenient. You want that optionality there to be able to have a meeting on Zoom. So that's why I thought earnings would be good. I bought it at like $88, $89 in after hours. I sold it at the 50 DMA at 105, which was my target. Unfortunately, I got back in like at 102, and it's all the way back to 93. So I'm still in the green on this trade, but I could have been more patient with the re-entry. So anyway, so Zoom gave the NASDAQ some hope and said, all right, maybe we can. And by the way, it took ARK up with it because Zoom is probably second largest holding in ARK, and ARK was up yesterday and after hours, and like, okay, now we can get some momentum in this bear market rally. And then about, I don't know, 15, 30 minutes later, what I'm describing is a nail in the coffin came in, snap. This is the way I view it. I think a lot of other people are viewing it also. I don't care about the numbers at Snap necessarily, and I don't care that it's down 34%. What I care about is the commentary. And if we scroll down here, let's get a snippet of that commentary from yesterday. All right, here, let's see if we get it. Here it is. Look at this. Since we issued guidance on April 21st, the macroeconomic environment has deteriorated further and faster than anticipated. All right, right there, boom. Some people are asking why is this doesn't make sense? Why is such a small company, Snap, $37 billion company, having this kind of impact on futures last night on Apple, on Google, on Facebook? And, to me, it's obvious because they blamed it on the macroeconomics. And the key is deteriorated faster and further than anticipated from just April 21st, which was a month ago. Okay. So I think that, look, the way I look at this market is most people know the final shoes haven't dropped macroeconomically. And people are just positioning for rallies, for bear market rallies, for technical rallies. So everyone is ready to accept bad news, number one. So sentiment-wise, they're like, yeah, well, duh, we were waiting for this, but I was hoping it wouldn't come this fast, right? The deteriorating macroeconomics. And then, so you have a lot of people who are going to buy into it. That's why Apple started selling off and the Qs and everything else in the futures. But here's the key also. Further and faster than anticipated is something which is a clue to me that it's not priced into the stock market yet than anticipated. If it was further and faster than anticipated for Snap, it very likely is the macroeconomic situation is very likely deteriorating further and faster than anticipated in terms of what's priced into the stock market. Okay. And you can see that, futures are down. Look, I don't know. This thing can pop. I've been directionally bearish for a long time, and I'm handling it better in my IRA where I don't do a lot of trading. I have my hedge with PSQ, and I don't change those allocations much. In my trading account, I've been going crazy. I can't, because like I'm directionally bearish, but I'm like, yeah, I want to play the squeeze. I want to get a 10-15% move, and it's been very hard timing it, right? Because of all these catalysts coming out. So it's been very difficult if you're trading this. So I can't tell you, is it gonna squeeze up first? Still, anything's possible, but I have to lean towards what I've been talking about for a long time is a real big breakdown in Apple at some point soon, which is going to cause really like that big sell off we had in the risk assets and ARKK hasn't come to the generals. It hasn't come yet to Apple and Microsoft and the Qs and the SPYs down 20%. Like not a big deal for SPY, right? That's barely it's a blip, right? I really think at some point we got to make a strong move towards this 200-week moving average, which is around 350. We're at 392 now, and I think it can come very soon. I think it can come the next couple weeks, uh, next 2 to 3 weeks or less, right? So again, I've been tricked with these ups and downs, trying to position myself to play this in my trade account with puts. And we'll see if I can manage it and execute it better this time. But I want to make sure I'm in puts for what I anticipate will be a big liquidation. I anticipate at some point you're going to have warnings coming in for Apple, whether it's from Apple itself or from analysts or from third-party data that's going to be predicting that sales are going to be down at Apple. At some point, that shoe will drop, and then you're going to see the real panic, right? You're going to see the VIX skyrocket. You're going to see retail calling the brokers, get me out of mutual funds, get me out of SPY, get me out of Qs. You're going to see the passive retail, which is the majority. Passive retail, like selling Apple. All of that shoe has yet to drop, and I think it will happen. And personally, in my trading account, I will try to play it with puts. So had bad timing here in the last week or so trying to do that, but I'll be looking at that very closely. Then this morning, you say, oh, maybe we had a little bit of hope because what happened? Bed Bath and Beyond? No, Best Buy. Best Buy came out with earnings this morning that was top line beat, but missed on the bottom line. And they also reduced guidance with similar commentary that Snap had. But this morning, the stock was inexplicably up like 7-8%. And one of the reasons that could have been at the time, I was postulating perhaps it's priced in, right? Perhaps the worst is priced in. And if you look at Best Buy, they have a PE of around 10, even with the reduced guidance. Here it's showing 7, and it's about a 10 with the reduced guidance, full year guidance. So maybe it's still cheap and it was already priced in. Maybe something worse was priced in. So even though they had to reduce guidance, that was why it's up. So you know what? Maybe that's a glimmer of hope. Maybe the bulls will hang on to this and cause that bear market rally we've all been waiting for. But alas, it didn't last yet in pre-market. We're back down. We have to see what happens. It does have like a valuation floor that Snap doesn't because Snap's not profitable. But then look, this is just continuing everywhere. This is not company specific. There is a macro issue. Abercrombie and Finch with earnings out down 31%. I think I saw something in there about margin compression and they reduced guidance. So yeah, guys, listen, here's an idea for you. 2 ideas. Maybe it's time to short a stock like Lululemon, which let's see. Lululemon, a luxury retail, PE 36, and I'm sure that's going to drop. That E is going to drop. Guidance is going to come down. Earnings are early June, right at critical 200-week moving average support. Another one is potentially Ralph Lauren, sitting here at $92. Well, the PE is 14, but I think that E is going to drop. So there's some ideas here. I think it may be worth it to look into in terms of shorting other stocks. I got to bring up INMB because this is I don't know a VIP stock presented by Dan Carlson some time ago, Alzheimer's treatment, and I haven't had time to really look at it. News just came out here at like 8:59 a.m. or I guess it was 8:38 this morning. Anyway, it came out this morning. And actually 5:24, 7:51 a.m., 5:23, 4 p.m. Maybe it was yesterday, 4 p.m. But there was a pause on this Alzheimer, a hold. FDA put a hold on the Alzheimer's disease drug. I don't know why yet. Haven't looked at it. About manufacturing, it looks like a manufacturing hold. They want some more information. So the stock is down very sharply this morning, and that's not going to be fun. You guys make your own decision how you want to play that. So just keeping you up to date on what's happening on that side. And man, I've been very bearish AMC the last week or so. I've been unsuccessfully timing puts trying to trade this, but look at this chart here. To me, that's just a terrible setup. It looks like important support around the 1150 right there that's breaking down. Probably, I think it's going to re-challenge 10, maybe go lower. One of many stocks that, if you want to play the short side, is something you can look into. And this morning, it's gapping down below that 1150 level. You know what? It's almost impossible to make money in a trade account unless you're doing shorts. I mean, we had that one win in DRIO that's been up. And you can buy the bounces. So far, you've been able to buy support lines, and it's been going up over the last month or so. But that's like an exception. Maybe in the energy stocks, the agriculture stocks have been very hot. They've been doing well, but you got to maybe have, if you want to make some money in a trade account situation, don't see any way around it right now. So that's the story. Hopefully, Zoom will get a bid and I can get a second exit out of that and make some additional profit. We'll see. But yeah, be careful out there, guys. I really think at the minimum we're going to be testing the 200-week moving average 266 on the Qs. And SPY, I'm not sure if it's going to touch 350, but make a move towards the 200 DMA, 200-week moving average, 356 or so. SPY has more diversity, right? They have energy companies, they have agriculture companies, they have all sorts of other stuff to protect it a little bit better than QQQ, which is going to be more vulnerable to higher interest rates and the margin compression we're seeing. So that's about it. Let's take one last look here to see if there's any news that just came out. INMB is getting a lot of mentions this morning on that clinical hold. Abercrombie and Finch down 30+%. But yeah, man, take a look at LULU and Ralph Lauren. Those may be interesting plays to the downside. I wish I had better news. This is a really, really, really tough market. I'm confident I'll be okay in my IRA 2 to 3 years out. Trading account, very difficult to make money, guys. If you're making money, if you're only down 10, 15% this year, you are doing extraordinary. So good luck, guys. I'll talk to you in the rooms.